Good afternoon, everybody, or almost afternoon, sort of afternoon. This is Jeff Scott, and welcome to this week's review. It is October 9, 2016, and this is part two of Should I Buy or Should I Sell? Because not a whole lot changed in the market last week. Lots of up and downs, and we end up within a 1% or so of where we started. My contact information, hgsidoc@gmail.com. This is for education purposes only, and recommendations of the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I am independent. No one pays for me to say anything about their products, and everything I use I pay for. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. As always, I like to call out those that I've learned so much from. It started first with William O'Neill and Canslin, and then it was improved by Woodward and Brown, Ian Woodward and Ron Brown, who partnered with George Roberts with HGSI to take that to another level. Morales and Catcher, ex-traders for O'Neill. My buddy George Lee. Position Sizing Money Management from Van Tharp, and someone who I follow very closely, built a friendship with. I've been to his training programs. I've read his books. I've bought his indicators. And I actually have a little table in his office for when I'm in town. John Person. We'll talk a lot about him as we go. Highly recommend you read his books and attend some of his education. Anybody that sees me in Orange County this weekend will see me using some of his tools, especially in Thinkorswim, because they're widely available for your use. I have a lot of different programs that I use and a lot of different indicators. Every once in a while, I try and clean up my life and reduce some of the clutter. But what I need to keep is TradeStation or Thinkorswim are my platforms that I enjoy. Genesis Trade Navigator, I think, has a lot of value. Probably too much money for most people that follow me because it's not provided by your broker, but I think it offers a great charting and scanning platform. For my market analysis, HGSI and EdgeRater. For seasonality, predominantly using Seasonality Trader today. Like others, I'm patiently awaiting Best Choice to launch their new web-based version. And then I use a number of different websites. Here is highgrowstock.com. Do not get concerned about my email address. I've done free education and support for this company for a decade. My email reflects that. But I have no financial relationship. I'm not paid for doing anything, so I'm a professional amateur. I'm an amateur volunteer. Basically, the key things here is free 30-day trial. And the other thing is under investment strategies, not only will you see a lot of my webinars, but Ron Brown posts constantly. And you could see even on the front page, this is an old picture, but a list of some of the webinars. And that's Gil Morales, who actually uses HGSI software. Stock patterns are cyclical, and we have been in this place up here for weeks, almost seems like for years. You know, we get periods of strong uptrends and downtrends. That's when you make money. Frankly, I make most of my money at extremes. Every time I think we're going to roll over, we go higher, and you'll hear more of that this week. It matters where we are in the cycle because, gosh, if I don't know where I'm in the cycle, I may not make the right trading decision. As I hope you can see here, I vary what I do based upon what stage I am or cycle in the market. This is a tweet from John Person. I highly recommend not only do you read his books and everything, but you sign up for his Twitter feed from personsplanet.com. And notice he calls out, and this I think is probably done in I can tell if it's using a gray background in Thinkorswim or if it's Genesis, frankly. I think it's Genesis, the way that it's writing on the side. But he's calling out how the spiders are in a wedge. The funny thing is you can look at the S&P, the NASDAQ, the Dow, and you're going to see that over and over again. This is going to end. It's probably not likely to make it all the way to the apex. And whether it breaks out or below, it's a measured move based upon back here. I think we don't know which way it's going to go, but it's going to go. So if we look back at last week, Friday, not a great day for the bulls. You could see that green and some healthcare and biotech and some financials, but a lot of red throughout. If If you look at the markets, and we'll come on a better view of this, I guess the point here is just to look how the ranges are narrowing, and pretty much across the board as we're in this wedging pattern. You can't see it well here. There was a one-day wonder on VIX, and the dollar has broken above the 200. Now that may be important to pay attention to, because if the dollar goes up, that's going to be tough on the commodities, including the metals, the oils, and could be a headwind for the U.S. stock market. Could also be a deterrent to raising rates. So I guess it's depend how you want to look at things. Here's the weekly charts, and we'll get back to the individual signals in a few minutes. This is how Genesis looks like in 5 columns. First column is the E-minis, then the NASDAQ futures, the Russell futures, the NYSE futures, NYSE, it's not futures, and then the Dow futures. And I guess daily on the top, then weekly, then monthly. So I can take a very quick look at the markets. I could see that we're in daily sell signals. Certainly, even on the NASDAQ, we have a daily sell signal came in not too long ago. On the weeklies, you can see we have a weekly buy on the NASDAQ and on the Russell. We're in sells on the big stocks, on the Dow, on the NYSE, and the S&P. And then you could see monthly, we're still in a longer-term uptrend with buys throughout. That gives me some insight into the market. Now, a little bit of color on what's going on. To the left are 30-year treasuries. To the right are 10-year. And one of the reasons why you might be seeing bonds selling off is that it's slow, but it's steady. Interest rates are rising. Is that predicting a rate in December? Probably. I think it's 60-65% predicting that. Most are not predicting a rate increase in November, right at the time of the election. And as I've highlighted here, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders, and rising rates are good for banks and insurers. Now, it's kind of interesting. If you go back up here, let's see, home builders were all negative. What else would be bad? REITs. A mixture, but mostly negative on the REITs. The financials, insurers, were positive. More home building stocks were negative. So again, rates will sort of determine some of the sector rotation. AD lines, I guess at the end of the week, both the small stocks in white and the large stocks over on the right-hand side, white will be the thing that we're looking at. Yellow will be the spider comparator. I guess they sort of rolled over a little bit on Friday, but this is in the setting of being at near all-time highs, so I would still say AD lines have continued higher. If I look at percentage of stocks above the 200-day and the 40-day, I'm looking for extremes. We are coming off overbought areas, coming down on the 200 and down on the stocks above the 40. Now, again, extremes matter. We're not at extremes, so this isn't very helpful except to say we're not at an extreme. Speaking of extremes matter, every time we get up into this top zone above 90% or below 5 or 10%, we get market reversals, and that happened again here and up here, and we're getting close to the place where markets reverse, but we still have a ways to go. But this is the only thing that would be push me towards the bullish argument. So far, everything else has been neutral. The daily McClellan and the weekly McClellan are both negative on the oscillator and the summation index, but nowhere, again, near extremes where one would expect reversals. If I look at the buckets, talk about in the middle, 50-50 as far as number of stocks above and below the midline of their Bollinger Bands in the S&P 1500, and you could see there really isn't any evidence of overbought or oversold. And we've actually come off a little bit in the last week. This is where we were a week ago. Here's where we go 2 weeks ago. Hindis, as we talked about in my educational seminars, the Hindenburg can be evidence of a market in correction or something worse. There hasn't been a major market in years that decline that has not occurred, preceded by a Hindenburg omen. Typically, it's done on the NYSE. I've also been checking it on the Russell 3000. And as you can see, neither on the NYSE do you have enough new highs or new lows to even be close. And the only thing that triggered is McClellan is less than 0. So there's no evidence of a Hindi. That could be somewhat leading to the bullish breakout as well. We are in, again, chop zone. It's yellow. When the markets in this third series of the Woody indicator are green, this is a nice trending market and a place you make money in the longs. Mostly red, you're probably going to make money in the shorts. When it's yellow with intermittent green and red, you're just chopped up and tough to make money in either direction. And then if we look at sector analysis, again, these are edge rater. I should have pointed that out. This is automates a lot of my process. And you could see in a strong market, not only did you get the Woody indicator green throughout back in July, but in a strong market, you also saw, again, this is the same time frame, most of the sectors participating. This is pretty ugly. You've got energy, which is green on a buy, but you got materials, you got staples, you got healthcare, and you've got utilities that are all to the negative, and then overall still in a neutral setting as we saw before. Canaries in the coal mine, I take some of the leaders in the market as taught by the master Ian Woodward. I put an index on and I use it as an early warning sign. Certainly predicted with a fall breakthrough here beginning of January what we saw last year or this year with the market bottoming in the first quarter. Hard to get upset when I'm consolidating above old highs, but I will keep a look on that. And for those that haven't been here the last couple of weeks, I should retitle this Canaries 2017 as I decided to drop LinkedIn, which is being taken over, and substitute it with Baidu. I use Visual Trader as well, and I use it mostly for this. I'll have one of my screens with this during the day. It gives me real-time sector performance here. I'm just looking at percent move in the market, and you could see where there was some strength in services, technology, this is energy, and some of the financials, which were mixed because REITs got hammered. But industrials, consumer goods, healthcare was mixed. Utilities, for the most part, were hammered. I think this is Nextera that had the big up move. But as you could see, a lot of weakness in the market. Now, in the real-time program, I put my little pointer over this, and it tells me who that equity is or who that entity is, and then gives me sort of an idea over what the performance has been. Know your news and earnings. So there's some movers here. FOMC minutes, as I said, probably will build the case for December. Tough for me to see November occurring with the other entropy the markets are going to see related to the election. But FOMC inventories might be useful. Crude and natural gas inventories always help. Export and import prices, PPI, retail sales, sentiment are a number of things here that can move the market. I guess to make our life a little bit easier, not a lot of earnings, but let's just point out there are some big ones. Alcoa, maybe not as big as it used to be. That's no longer a Dow. Ozark may give us some insight into some of the regional banks. CUDA, Barracuda, a play on the cloud. CSX, transports, as our Delta. A couple other banks are in here. Citi down here, JP Morgan, Wells Fargo. So there are some pretty high-powered earnings this week, and I think we'll probably learn quite a bit from some of the earnings announcements that come out at the end of the week. I better stop that. I'll be back in a second. All right, sorry about that. Got some minor issues going on in the family, so if the phone rings, it could be my wife, and I got to answer it. This is a free two-piece of information from leaveitbrothers.com. You got to register, but I don't pay anything, and it's on their website splash page. So, summary: major markets coil sideways toward apex of a wedge. NASDAQ 100 and stocks have held up the best. Dollar and VIX pop on Friday, short-term wonder or time to worry. Bonds, gold, and silver sell-off. Another Hillary win on Sunday night debate might propel market higher, but at some time the volatility in our election, Brexit, and Greek debt may become a risk to market gains. And will the market break up or down is questionable. Will they break soon? Seems more and more likely. Usual agenda for my top-down review. I have a chart of the week, but just to review, last week I didn't pick anything new. I said I would stay in my Sonic Automotive, and you're going to see this exact pattern on the one that I picked for this week. So this actually was 2 weeks ago. And last week, again, I said, I'm just going to stay with it. And stuck above the 200. I'd rather have the 50 above the 200 and sticking above the 50, but you take what you got. It had a kahuna and a mobile breakup from a squeeze, and everything up top turned green. This is Sonic Automotive. I liked it as well because it had a high close doji on the weekly and increasing OBV coming out of a squeeze on the weekly, had broken out on the daily. Here we are as of Friday, and I think you can see that we're getting very close to my target. I wouldn't have blamed anybody who took profits off on Thursday. This white mark, which looks about $19.20 or so, I'll look at it maybe in TradeStation, see exactly. That is what John Person refers to as his last conditional change. It's a variation on a trailing stop. I'm moving my stop up to there and going to capture most of these gains. I will take it all off if I get stopped out. When I go through the green target, I'll do as I said before, I'll take half off. We'll come and trail it up from where it's at now. So I like to sometimes go into TradeStation and take a quick look at sort of my market thermometers. As I like to tell everybody, this is something I do. Not everybody has to use what I do. And the dollar still is. I don't know what happened with TradeStation. I have to clean up some of my caches yet, so I'll use ETFs when I can't use indexes. But what I like to do is I like to get a sense of what the market's doing. I have 5 different things that I look at. Golly. That's a daily, so that changes. I look at, that's all I had to do to get those things to work? It can't be. Hold on one sec. All right. So this is a chart I call my market force and divergence. I look for 5 things. First thing I look for is the John Person PPS buy in green and sell in red, whether they're buy-sell indicators, whether they're trend indicators, whatever you want to call them. I use them for a buy-sell indicator. That's the most important thing I'm going to look at. The second thing I'm going to look at is the color of the paint bar. That comes from Alexander Elder. That's his impulse indicator. When the bar is green, he says the buying window's open, which means he can go long or hold. When it's red, the selling window's open. He can short or hold. He shouldn't be buying new. And when it's blue, it doesn't give him a signal. I find that to be useful. Often as I'm going from a buy to a sell, I go blue on the price bar and sometimes red, and that might be help give me a lead as to a change in direction. Third thing I look at up here is the little red dots. If they're on top of a paint bar, of a price bar, that tells me there's likely some MACD divergence. If I see them below, it's convergence, bullish below, bearish above. I look at where I am within the Elder envelopes. You can use whatever bands you like. I know some people use Stark, some use Bollinger Bands. And I just know that when I get below the Bollinger Bands, I'm likely to come back in. Now, something that we see on the indexes, especially as stock indexes have a tendency to ride the bands up for long periods of time. And then I look at my high jump bar, knowing that when I get above 90 or 95%, I'm at a place that the markets like to correct. So let's start and look at the E-minis. So, as I said, we're sort of in a narrow range here. I think you could see that. We got bearish MACD divergent dots. We got a red candlestick, and we're in a buy signal. So sort of a mixture here. On the weekly, we're in a sell with blue. On a monthly, we're in a stronger. So longer term, we look better. And short term, we're looking kind of weak here. We've dropped down to 71% on the paint bar. On the high jump, I look at this, I see weakness, and I think the E-minis under pressure. Again, we'll see what happens with Hillary. The the YM, the Dow, the other big stocks. Again, let me see if this is, yeah. Got a red bar there in a buy signal. So on the E-minis, we'd given up. Let me take that back. In the E-minis, we are in a person buy signal with the red and the MACD divergence. So not in a sell signal yet, but worrisome looking. Sorry about that for the confusion. And the YM, similar picture, red paint bar, but in a person buy, no dots at 69. So I see bearish a little bit, but still in a bull sign. So I'm going to go neutral on the E-minis and the YMs. I'm not going to make a case of up or down. I see too many diverging indicators or diverging messages. I look at the NQs, which I know are stronger, and I see, interestingly, at least on John's work, still in a sell signal, but with blue bars, we worked off the divergence up at 85%. And then on the weekly, we can see that the NQs are in a buy signal as they are in the monthly. So a little bit stronger, longer term than they are shorter term. Out of curiosity, is the NASDAQ looking the same way? The NASDAQ actually did get a buy signal. So I'm kind of curious why I don't see the buy signal in the NQ. So I'm going to be a little bit feeling better about the NASDAQ, but not out of the woods. And then the Russell 2000, the smaller stocks had a new sell signal come in Friday. It's in a weekly buy with a blue and a monthly buy. So short-term weakness everywhere. I would say the NASDAQ is the strongest, then the Russell, and then the big stocks are definitely weaker. If I look at the dollar, I mentioned it had a pop this week. The dollar looks stronger than anything else we've seen. It's in a buy green here, only 88% up there. It's in a buy green on the weekly. It's in a longer term sell signal with the green, but in a red sell signal. If I look at gold and silver, we might expect them to have sold off. Here's mini golds down below the lower envelope, so maybe a place that we might be looking for reversal. High jump, pretty darn low. If I look at silver, I probably don't have silver here. We'll look at silver later. If we look at oil, oil popped on news that OPEC was going to reduce. Now, the interesting thing is OPEC is in green long weekly, at least in a PPS long with a blue monthly and daily. So gold looks good. Be aware it's at 95% on the high jump, and it's got some MACD divergence suggesting that maybe oil needs a little rest as it's at the top of its channel as well. Very quickly, I like to look at the sectors. And healthcare, weak. Enough said. In a sell signal in red, sell signal in red. Financials. Yeah, XLF, something happened with my data feed. So I looked at FAST as sort of an idea. Financials, actually, with the rising rates, we had a green arrow and a blue bar here. So on a weekly, it's still on a sell signal. Discretionary, in a buy signal, blue. Longer term weekly, it's in a sell signal. Technology, in a short-term sell signal and a weekly sell signal. Industrials, in a new sell signal earlier this week with a red bar, weekly in a sell signal. Staples, in a sell signal daily and weekly. Materials, sell signal daily and weekly. Utilities, sell signal daily and weekly. Energy, about the only thing I'm showing you in a buy signal, and in the weekly it's still in a sell signal. So you look at this, how excited are you with this? I'm not. I think that we got some, in fact, I looked at this and we think about how I want to say this. I kind of think that looks better than the underlyings look at. And I think many of us have felt that in our portfolio. We've had some big stocks up, big stocks down, a lot of movement everywhere, but there have been a lot of stocks in a world of hurt. So indexes look challenging. Now, the thing I didn't mention that I should is The Bongo weekly, which is the middle one here on the daily, is in a sell signal on the E-minis. It's in a buy signal on the NQs. Again, I'm looking at the weekly, which is the middle. On the YMs, it's in a sell signal, and then the Russells, it's in a buy signal. So again, more evidence of more strength in the smaller stocks and the technology stocks. Now let's go into HGSI. Let's go into Major Markets Plus, something provided by Woodward and Brown. Major Markets Plus, T1, which looks at price and volume, heavily weighted towards yesterday. And what do we see? Highest rank is volatility in the dollar. Interestingly, the industrials are up here. Down in the bottom, gold, silver, oil, small, mid caps, commodities. So dollar up, a lot of things down. If I look at one-day performance, the big losers were energy, despite the fact the XLE is strong, and you could see the big winner was volatility. Now, gold and silver were actually up on Friday, but down heavily on the week. And if I look at just Friday, the dollar was actually down a little bit. Now, let's take a look at some of our favorites here. So I changed my view up here, so let me just talk through it. I want to make it a little bit easier to see, and you know what, I didn't add it yet, so let me add this file. All right, so I'm just going to talk through a couple of things I see here. At the top are my bongos, and I always put the longer term one on top. In fact, let me just edit that so no one ever wonders about that. It's not going to do that. Weekly. Daily. So you can see both my weekly and my daily bongo are red. I've got two different ways of looking for Hindenburgs, looking at the bar chart indexes, and one looking at all NYSE. The top one is the all NYSE, which is the traditional older way of looking at it. The bar charts are some different index roll up. I'm trying to see if there's a difference, but as you can see, we have no Hindi. For moving averages, I use an exponential 8 and then simple 1750 and 200, green, blue, and red. The magenta or purple one is the 8. Down here, I'm looking at OBV, which you won't get on the S&P 500, but Phoenixes in pink and Kahuna in blue. And I've been calculating of late on the NASDAQ as I was concerned that the NYSE may be different with all the bond funds and interest sensitivity. I don't see a big difference when I go back and forth. And then, actually, these are Kahunas here, and then these are the Eurekas and Phoenixes as calculated. And remember, these are sort of our follow-through day, and they're calculated on the index, not on the stock. So let's take a look at what we see here. S&P 500. And as I pointed out from John's work, you're sort of looking kind of like this, coiling in a wedge, and that wedge is likely to break. And John, I think, had a great tweet about that. I don't want to steal his thunder. A Kahuna to the downside earlier in the week, but we're really just going back and forth in a narrowing range. Weekly bongo to me is tough to go long on that. Here's the S&P 500. If I look at the Dow, probably see things that are very much the same. And hello, I know it was up at the... I think we could do the same thing. There's the Dow in its wedge. And again, the weekly bongo is actually green here on the Dow. And it's in a, had a kahuna earlier in the week. But just like the S&P, it's sideways. And hard to get real excited here to the long side. The NASDAQ, I think, is the best looking of the bunch. And why? It's at least above its 8 and 1750 and 200. It does have a at least in HGSI, interestingly. The weekly bongo is red. Now, if I go into a weekly chart, you'll see that it's, so that's interesting. All right, I'm now curious, do I have this messed up in the program, in my view? So edit current view. I did. That's why it looks different. Ha! I'm being an idiot today. There you go. Now, let's go to the Dow really quickly, because that was a surprise to me. It should be red. Perfect. Now I'm going to go back to the NASDAQ. Weekly is green. It's been in a green ever since we broke up here and predicted the big market move. So the NASDAQ looks stronger. It's above its moving averages. The NASDAQ 100 out of interest to me because that's where Amazon is, which is a big holding of mine. Looks about the same. And then if we look at the Russell, been green for quite some time. If you just trade off my weekly bongo, you would have had a pretty good move there, about 20%. Sitting on the 50, not as strong as the NASDAQ, but as I said before, it looks better than the big stocks. Okay, we go look at the dollar, which I mentioned had a pop. Had a shooting star on Friday. It will be interesting to see if this isn't a reversal and we come back down and whether or not the 200 holds. The bongo is green on the weekly, and we can see it's failed to hold above in the past. Why is this important? Well, if you're a gold lover, high dollar gold stopped on the 200. That kind of looks like it could be a reversal bar and decent volume. We'll see. Still weekly bongo's red. And silver actually held at the 200 and bounced there, which that could be reversal on silver. Be interesting to see if it's reversal. It's early, and I'm certainly not telling you to trade off of it yet. And if I look at the volatility index, it had a little pop up and came right back down, sitting on its 50. And as we've talked about, excuse me, ad nauseum, when the VIX goes up, it's not good for your longs. So we used to say when the VIX is low, look out below. When the VIX is high, it's time to buy. And I think really the true saying should be, you get killed when the VIX moves up. You make money when it falls. When it goes sideways, it's neutral. And we're still above neutral, and I'm going to be watching the VIX closely. All right, that's the major market indexes. I don't feel a whole lot of warm and fuzzies except for the small stocks, the NASDAQ stocks. So let's now look at what industry groups are leading. We have 171. This is an HGSI, 2-day EMA up. Only 16 made the upside. And let's just look at the industries. Banks, casinos, department stores, banks, generic pharma, oils, large pharma, life sciences, marine, mass, medical, PC, P&C insurance, rail freight, semiconductors, apparel, and steel. Clearly banks, with both banks and diversified banks, some healthcare, surprisingly generic, and large pharma, but not biotech. Semiconductors made the positives as well. And interestingly, department stores. When I look over here at forces, I could see all of them are, the 2 days are up, which it should be. And for the most part, the 13s are up. So that means over a longer period of time, they're in an uptrend except for the healthcare. So that's interesting. Maybe a reversal's coming. I usually go through the top bunch, both specialty apparel and department stores made it. Does that mean it's Christmas time and coming and retail is going to run? Maybe. I've mentioned pharma. I should have also mentioned medical devices and life science equipment. So quite a few on the healthcare. And then I typically right click, change index group, and look at some of these and start to add them to my watch list. So I could stay in this clean view, which some of you might prefer, but I like my dirty view. So what did I just add here? I added this bar here as accumulation distribution. These are the 13 and the 2-day forces. This green line is the high jump bar. When it's up at the top, I usually don't buy. Put an asterisk. I'll come back to it in a second. You should be able to scale these bars up and down to make the windows bigger. This is a green candle high, green candle low rather, which you often see at a reversal. A red candle high, which is another reversal. Bible gap up, which we saw in the gap this week from Morales and Catcher. The yellow is a squeeze. The next line are mobile breakouts and breakdowns. This is the industry group, which is not down on the bottom. Had been coming down but turned up. This pile here will be pocket pivots. This is OBV with a moving average, and these are kahunas. The asterisk on high jump. High jump only works in the setting of a consistent uptrend. An uptrend would mean my price is above the 8. My 8 is above the 17. My 17 is above the 50, and the 200 is and the 50 is above the 200. That to me defines an uptrend. I require that for the high jump to be accurate. Clearly, we're not there. I ignore the high jump here. So I actually liked gap. It had a Bible gap up, which is kind of funny for the gap to have a Bible gap up, but it's sitting right on the 50, and this was tempting to be my pick of the week. The problem is on the pick of the week, I tell you about it next week. I don't have a whole lot of time for it to move, and sometimes these will backfill a little bit and go sideways. You hold your stop right below the bottom. Maybe you go down to the 200-day, giving a little bit of porosity. I thought Gap looked interesting, and it's on my watch list. Zoomies, I don't really like the product, but it does have earnings starting to increase. Also had a Bible gap up on Thursday, so if I like the gap, I should like Zoomies as well. I prefer the gap. Foot Locker, sort of a high base and broke out with a pocket pivot on Friday. Again, these stocks look pretty interesting, don't they? The Express, less so. It's got to get above the 50. Burlington Stores, I've always liked this guy. Pull back to the 50 with a pocket pivot. I think it's at a good buying point. You might want to be somewhat risk sensitive and put your buy price a little bit above the PSAR dot. And Burlington made it to my watch list this week as well. Urban Outfitters, probably a lot of these moved with the gap. Also a high base, mobile breakout, a squeeze, pocket pivot, and a kahuna on Friday. There's something going on here, folks. American Eagle Outfitters had a down day, so we're going to skip that one. So specialty apparel looks interesting again. Is it time of season? We're seeing Christmas decorations, believe it or not, being put up in my neighborhood. Petrobras. Petrobras has a lot of things potentially working for and against it. Not only is it going to be sensitive to oil prices, it's sensitive to political risk and then sensitive to dollar versus the real risk. As you're probably aware, there's been some prosecution of their presidents. Now they're going after an ex-president. A lot of questions about graft and illegal kickbacks with this company and the government. However, it's hard to ignore the fact that it's in a pretty powerful uptrend, has great earnings per share growth, which you don't see in this industry. A number of kahunas over the last week, breaking out on Friday. I might be watching this one closely. Petrobras. Here's Petrobras Argentina. Doesn't have the same earnings story. BP had a pocket pivot. Doesn't get that excited, but I do look at this earnings a couple quarters out. Dividend yield 6.6. That is exciting if you're retired. Chevron, kind of not doing much, which is okay when you get a 4.2% dividend. Also has some big earnings. So I think you have a combination of weak comparison and then some rising oil prices. Shell there 6.2%, and then the integrated oils. Integrated oils look interesting from a couple of points. Petrobras certainly leading them. Good interest rates, rising oil prices will be good. Integrated oils, number 2 group this week. Number 3, PC Insurance. Now, I think part of the pop on Friday was because of the reduced concern about Matthew, although there was plenty of damage north of me, not in my home, thank God. Also, rising interest rates are good for insurance companies. Notice the weekly bongo is deep red. So these are stocks that have had enough downtrend time that they're in a downtrend. Bouncing off the 200 with a pocket pivot, a kahuna out of a squeeze is Chubb Group 2.2% dividend. Lots to get through with the 17 and 50 and a PSAR dot. UVE had a Phoenix followed by a kahuna. Looks like a reversal here. I'd like to see it get above the 50, 2.5% dividend. Travelers, more of a sideways pattern and perhaps more of a Darvis box type trade, buying into low end of the pattern. Had a kahuna, pocket pivot, a mobile breakout from a squeeze, pays a 2.3. So I think you're seeing the same thing in all of these, which is they pull back and then they had some momentum come in Friday. Berkshire B looks like it's in a downtrend. Eventually, this might be an interesting place to be. XL, Swiss below the 200. I don't see a lot of momentum in these plays. I think this is a story on how to play rising interest rates and a little bit of the de-risking related to the hurricane. Department stores, another retail play. I don't know if I talked to you about Kohl's last time. I think I did mention it, or maybe it was 2 times ago. 5, 6, 7, 8, 9. I think I mentioned it when I was doing this. But Kohl's broke out with a pocket pivot coming out of a squeeze. Everything looks green. Kohl's looks interesting down here. Probably not a big risk buy, putting my stop somewhere down where these moving averages have come together. Nordstrom breaking out here or breaking out of a base here. Everything looks green out of a squeeze. Pocket pivots, kahunas earlier in the week. Macy's just broke above the 200 with a pocket pivot. Everything looks green up there. So clearly, pennies not so nice. Retail looks a lot better. Again, is it holidays? Is it the strong dollar? Is it strong sentiment in the consumer? Is it seasonality? Well, let's just look at Kohl's seasonality here very quickly. Since I brought up the term seasonality, I'm just going to put Kohl's into my seasonality trader. And earnings are not to the middle of November, but here's Kohl's. Now, if I look at of late, I didn't want to do that. Let's see if I can undo that. Nope, let me do Kohl's again. I know there's a way to undo it, but I haven't figured out how to do that. KSS. So trend on the short term is slightly up. The green and yellow, the yellow represents 10-year seasonality, the green represents 5-year seasonality. What it tells me here, there's a, it's doing this to me again. All right. I figured out how to fix this after I got done yesterday. Let me see one more time without doing anything. Let's look at, tells me here 7 out of 10 years it's been up from October 11th to November 23rd. Average up year 3.2%, down year 2.1%. So not a whole lot of seasonalities. Let's look at Macy's. There's no question we're going through a period of time where there's some strength in seasonality, although you look back here, it's kind of mixed, but certainly over the short period of time, it looks interesting for Macy's. So seasonality looks to be improving, and as do department stores and specialty apparel. Mass merchants, more on the retail side. Again, I think there's a message here. Wolf packs, when you start to see a bunch of these in the same area start to move, that should be something that stiffens your back if you're a bull. Dollar General, low in the pattern. I guess it's had a big move up, had a kahuna. I would pass. Dollar Tree, I would pass. Target, you might say it looks the same. I'm a little bit more interested here. And the reason why I like Target is we're kind of down to where this thing usually reverses. So I don't think my downside risk is too much. I had a couple of kahunas come in. I had a pocket pivot. I don't love it, but if I think I might show you, let's go to weekly for a second. Right, this is kind of what interested me. We're hanging out at a place that it typically bounces, and I think that was a high close doji. So let's go here, and I think Target made my potential buy list. Let's see, did it? Nope. Let me just put it here for 1 second. I knew there was something I liked about Target, and a new PPS buy signal, OBV breaking up here. It's still in a sell signal. That's why it didn't make my watch list. Coming out of a squeeze. Of all these down in this group, Target looked the best to me. Buy below. Again, something is going on with retail because 3 of the top 10 are in the retail group. Steel raw materials. This is another Brazil company, and you know everything's green here. It's sitting on the 50. I need some momentum to get excited, but look at the earnings per share growth. BHP Billiton. Breaking out. Not that exciting. Although Vale, kind of a little bit of momentum coming in here with a new buy signal on the Bongo weekly. I could be intrigued by Vale, but I like to see some momentum come in. Diversified banks. Well, one might expect the big banks to rally if interest rates go up. Wells Fargo, you know, this thing is trashed because of some very bad behavior. I wouldn't touch it with a 10-foot pole. Citigroup has earnings on Friday. Be aware. Earnings 10-14. Breaking out here, or at least moving up here. Everything's green. Pocket pivot, a bunch of kahunas 3 out of the last 5 days. Out of a squeeze. That's pretty bullish. JP Morgan looks the same, maybe even better if we look at the trend. Also earnings this week. Deutsche Bank has its own issues. Why Bank of America didn't get in here? I think because it was down on Friday, so the force would not have been great. Bank of America looks fine. It just didn't do anything on Friday, and hence it didn't make the list. Medical devices have been strong for some time. ICU Medical made my list. This is a viable gap up and a strong move. Kahuna, Ujo BV, it's probably run too much. It's up 20 points. I'd have to figure out why. Is that a takeover? I go more info from Web. Let's look at FinViz. It'll open right up to ICU Medical. All right, so they're up because they bought Hospira's hospital business, a hospital infusion business. All right, that might be a good story. I don't know anything about Atricure except what a big, powerful move out of a squeeze down here with the kahuna, everything turning green. St. Jude Medical. Let's see if anything I like. This has just been a long-term bullish stock. Zimmer Biomet Holdings. Same with Edwards Bio Life Sciences. These aren't trading stocks. These are stocks you buy and you put away. All right. Whoops, I hit the wrong button, didn't I? Number 9 is casinos. All I know is last week the sales numbers for Macau, for the first time in ages, they beat their prior same store sales for gaming revenue. That was a big deal. You can see IGT, what a nice bull run. This is one where the high jump tells me to be careful. But what a powerful move up here, 3% dividend yield. Don't love the earnings. MPEL, this one's got the most exposure to Macau. Certainly on a weekly chart looks interesting here. Even if it just runs up to the 200 at 24, you got to love it. If Macau is improving, MPEL might be a trade. Small dividend. Penn National Gaming, everything turned green, broke above the 50. A little bit bothered by overhead supply, or not overhead supply, but resistance at the 200, where it's failed multiple times before. Love the earnings per share growth. So, especially some of these smaller casinos, interesting Wynn in Las Vegas are not in this group. Let's just take a look at them very quickly. Wynn had some challenges, sitting right back on support. Weekly bond goes red. I can't like this one enough, but obviously this is one of the big kahunas in the area. And I'm going to watch it to see if it follows the smaller guys. And then Las Vegas Sand, which I actually have a position in, it's had a nice run up. Didn't do much on Friday. Had a doji here, a move up, closing above that doji. It'd be a high close doji, and we're going to be watching for that. All right, and then last group, generic pharma, and then I'll look at semiconductors, and then we'll move on to some other things. Allergan kind of gets a lot of the heat from Valeant, a serial acquirer, much better company. Their merger with Pfizer did not happen. Hard for me to get excited on the long side, except to say it's a quality company and someday it's going to go up, but I'd rather buy it when the weekly bond goes green. But it's something to watch. This is an IPO I don't know anything about, Avexis. Cup, handle, breakout, close to it, pocket pivot, still in a weekly bond go green. It's at prior highs. You know, if it closes above this highs, there's nobody holding the bag that's losing money. Doesn't show any earnings or revenue. So I'd learn more about it, but might be something to watch. There's been a lot of excitement with some of these high flyers of late. Amphastar Pharma, slow move up, pull back to support here. This also could be interesting. Don't know anything about it. Do your research. Clearly in an uptrend, and you could be buying it off as support with a pocket pivot. So, and I said I would look at semiconductors. Let's look at them very quickly. I have AVGO and see anything here that looks interesting. Lam and KLA, their marriage broke up, and they both seem to have benefited from that, which is interesting. Multiple pocket pivots since they announced they're separating, a viable gap up. Probably getting away from us. Lam Research, KLA 10 core, a little bit less getting away, still in a weekly sell, but a viable gap up on Thursday. In a squeeze, pocket pivots and kahunas and volume. I might look at that stock, Taiwan. Nice uptrend on Taiwan semiconductors. Getting high jump sensitive. Tower, pull back to the 50. This is where you buy. Or you wait to hear when you had a high close doji and a kahuna. Probably a little late, but breaking out above its prior highs. Probably has to get through this area, so I wouldn't be jumping on Taiwan. Vico, an LED manufacturer, doesn't have any earnings. Looks like it's breaking out here. It's been in a downtrend for a long time. It always helps to get some perspective by looking at a weekly. Yeah, it looks like it's bottomed here. It broke up the 50 weekly. My target might be to try and run up close to 30, which is a pretty big move. And it had a weekly kahuna as well. So we've found a couple of things thus far. Now let's do a couple of the other things I like to do. Just for grins, just to show you some of my favorite scans, just little different things this week. All securities should, and let's go into no filter. There are, well, that's clearly not a no filter. There you go. There's 8,366 stocks and ETFs in my universe, your universe. Some of my favorite scans. Gas in the tank. These would be stocks that have pretty good earnings growth. So let's just look at a couple of these. And this is they may not be good today. These are not looking at their chart pattern. All it says is they've got good earnings growth. So here's what I mean. Plus 54, plus 35, plus 38. Trades at a multiple of 15. It's growing twice its multiple. Stock is moving up off the 50. Everything is green. Pocket pivots, kahunas. Would have been nice to have found the stock back here. This one made my scan because of the earnings per share growth. Silicone motion. Obviously, you don't want to touch it with that candlestick there. But that was a failed breakout. We'll see if it moves up on Friday. It's at least worth watching. Mobile breakout from a squeeze, a pocket pivot, and kahuna. I just don't like the shooting star. Now, if I trade up on Friday, it sort of negates the shooting star in my mind. Look at the earnings per share growth. 57 plus 54 plus 40 trades at a multiple of 22. Repligen. Pull back. I'd like to see it get above the 50. It's not setting up to buy yet. It's had some great earnings per share growth. Looks like it's slowing down. That would be a negative. AGX, don't know anything about this except it's had great earnings per share growth. Pays a 1.2% dividend and had been in a huge uptrend move here, signaled by a kahuna coming out of a squeeze with a viable gap up. Never look back. It's starting to look back here. So I might scan looking at gas in the tank. And everybody should have these. One of the places where I find stocks setting up for buys are PSAR reversal close at a squeeze. So let's look at Microsoft. And let's make this one. So to be in a consideration of a buy, one thing is I think I put in, let me go back to the warehouse. Let's look at what's in this view. Actually, what's in the filter. Last close about 2.5, 150,000 shares. It's in a squeeze, and it's just got to be within a percentage of the PSAR dot. And I want it right below the PSAR dot because I know there are people that trade Wells Wilder system of taking longs when you take out the PSAR dot. Couple of things. It's also in a squeeze. So what does that tell me? It tells me that if I put my buy stop right above that PSAR dot, PSAR dot is at 58.09. So let's say I put my buy stop at 58.10. Because it's in a squeeze, it's going to suggest to me it's been going sideways for a while. And I could pick my lowest bar in the last 4 days, 56.97. I put my stop at 56.90. Then I'd be risking $1.20 on a $56 stock, which is about a little bit over 2%. I could pick the longest bar stop down in the pattern. The low here is 56.68, so I could call it 56.65. Now that can't be it. Let's look at this again. The low is 56.68. The low here was 56.97. All right. So I'll take this one. So I'll make my 56.65. The point is, if it violates the moving averages, I don't want to be in the stock. If it takes out this low, I don't want to be in the stock. I'm going to give myself extra breathing room. If it takes out this low, I don't want to be in the stock. So I've got a 3% or less risk on a stock that is probably high value stock. It's Microsoft. And it's been in an uptrend. I don't get filled unless I take out the PSAR dot. You don't usually see that be a 1 day. Here is a 1 day wonder where it dropped down. But you don't usually see the green dots being 1 day. They become a trailing stop on the way up if you trade that way. But this is a way to find stocks in a squeeze that appear poised to break out. Shopify. Wow. Let me say that again. Wow, that looks pretty darn good. Last lowest bar in the last 4 or 5 would be this bar. My low is 42.28. My buy signal would be at the PSAR dot. 44.61, make it 44.65. So I'm going to basically, That'll give me about a 9% stop, which is more than I like, but not bad. Let me grab that. Well, I was just butt called. So the bottom line is this is a tool that allows me to find stocks that meet my criteria. You get a lot like this, which are takeovers. Here's target. Again, clear buy point, well-defined stop, minimal risk. So that's why I like that scan. And then one of my other favorite scans is my pullback to the 50 scans within, let's say, 1% of free parking. What you should see here are stocks that have been in an uptrend, that are within 1% of the 50. I don't like that one. Don't like that one. Kind of like that one. Uptrend, sitting on the 50, had a kahuna. Too much junk here I don't like. This would be the closest one that I like. All right. So this is a pattern I like. Clear uptrend, went sideways, sitting right below the 50, had a kahuna. Now I'd like it a lot more if it had a weekly bongo buy. So I'd probably pass on this one, but I'm going to watch it closely because it's also right below the PSAR dot. A break above the 50 on Cincinnati Financial, which pays a 2.6% dividend, would be something I'd find intriguing. What else do I use? I go up to Gallardi Sprinters, which I have in here somewhere. And again, these are, you notice all the green here. These are some of the leading technical and fundamental stocks. Some of this we've already looked at already today. And then I like to go into my trade station scans. And I have some of my favorite scans, and those that came to my meeting will get my HGSI scans if they requested them. I don't sell them. I only give them out to people that attend my live meetings, so please don't ask unless you in that class. I can look, for example, a person buy to, a new buy signal occurring when the weekly's in buy mode. There's that CMO. Remember I looked at this when I said I was concerned about the candle, but it had a new weekly buy signal, a new daily buy signal coming out of a squeeze. These are also things that I gave out at my meeting. This tells me I had a Bible gap up, a pocket pivot, a mobile breakout, a squeeze, a PSAR's reversal, and my kahuna, and I had a kahuna. All that by looking at one chart. This is another one I like a lot, ARRS. This was almost my stock pick of the week. Notice the uptrend in OBV, the PPS buy signal on the daily. It's already in a weekly. Like that one a lot. I might look at my high close dojis on a weekly setting to see if I find anything I like. What I like to find here are stocks that have pullback, have a high close doji reversal signal, and have strong OBV even though their stock's been going down. See if any of these I think made my list. I think we looked at Penn Gaming. I didn't love the pattern, but yeah, I'm not going to bother with that. Ozark's got earnings coming out. I'm not in love with the OBV on the weekly. Nordstrom's. Okay. We have a winner here, folks. We have a winner. What do I like about Nordstrom's? Remember we talked about it from a sector analysis perspective. I've got a PPS daily buy. I've got a PPS weekly buy. I have a breakout with a high close doji on the weekly. Problem here is it's not really a high close doji because it's already extended on the weekly. That's a concern. I look at the monthly and I'm really not that extended, so I'm still interested. Here's my daily bongo. Weekly and monthly bongo are aligned. They're all green. Would have been nicer to find this stock back here when it came out of the squeeze 4 days ago. Beginning of the week. Look how strong volume is here on both the daily and on the weekly. Look at this volume indicator, green above purple, green above purple. And this is what I do. I go through these and I can also look at stocks that are in sell signals if I'm looking for shorting candidates. So let me finish with some of my favorite stocks of the week. Go to my screener and this. here are the potential buys for this week. And Antero Resources is an energy stock. Notice the weekly PPS buy, daily PPS buy, high close doji, volume looks strong. ARRS, we already mentioned, like this one a lot. Let's just look at this in HGSI charts because I think it's a nice looking chart. I want just to show it to you. This almost was my pick of the week. Uptrend, pullback to support, pocket pivot, kahuna, mobo breakout from a squeeze. Everything is green. Has earnings per share growth more than twice the PE. I like ARRS a lot. I already have it, so that's why I did put it as my buy of the week because I like new things. Almost Family, clearly in a downtrend, but notice a PPS buy signal. Notice the OBV was going up even as the stock was falling. It's in a PPS buy signal on the daily. Again, strong OBV. This one was interesting. Burlington, I mentioned. I like this one a lot. New PPS daily buy. I didn't pick it despite the strong OBV because I need to see a PPS weekly buy come in before I'd recommend it, unless there was high close doji or other sign that I was willing to take the trade. CTL, CenturyLink, pays a 6.8% dividend. Again, in a pullback on the weekly, OBV moving up, high close doji, a new PPS daily. I like this. A lot to like on the HGSI chart. Gap, we mentioned. Notice a new PPS weekly, PPS daily, OBV is strong. GNRT, General Maritime, high close doji in a downtrend. OBV trying to break its moving average. Strong down here, strong on the daily in a PPS. This was a nice looking chart as well. HOS, a cheap energy play on the services, I believe. A PPS buy and a high close doji on the weekly was strong or moving up OBV. I didn't like the red bar here on the daily, which I'd watch. IDEX and medical supplies in a big uptrend move. A little bit of a pullback in that uptrend here with a high close doji and a PPS buy on the weekly, high close doji, PPS buy on the daily, strong OBV, pretty expensive stock. Intrexon, a biotech with a new weekly high buy, good OBV, and a daily buy. We looked at KLA Tencor. You notice how these things align. A new PPS buy signal came in on the weekly. LabCorp, another healthcare stock that I liked. Here's Petrobras, new PPS weekly signal and daily. Penn Gaming we already looked at here. I'll skip that one for a second. TCB Financial. I like the OBV. I like the HGSI chart coming out of a squeeze. And then I did mention Taiwan Semiconductor that I thought it ran too far, but I did like the high close doji and the OBV. My pick of the week, and then we'll finish. Again, these are for educational purposes only to show you how I look at things and what I think about. Cuervo being my chart of the week. Notice that my PPS weekly turned green this week. Everything else looks good. Pink on accumulation I could deal with. Look at the industry strength. Love that. This is a mobile breakout from a squeeze. I'm breaking above the 50. I love that more than breaking above the 200, although that would have worked here as well. I had a pocket pivot. I had a kahuna. When I looked at it on TradeStation, I have a high close doji on the daily with a daily PPS buy, OBV strong weekly and daily. Bongos have lined up. I'm coming out of a squeeze daily and weekly. OBV's turning up here. The only thing I don't have here is a PPS buy signal. That was a negative. I also haven't crossed down here on the OBV. So the only part that I didn't like in this chart, as I said, was it's not in a PPS buy yet, and use a little help here on the volume. But my buy stop I'm going to put in at 56.09. That is this white line. 56.90 rather. My sell stop is at 52.75, which is the red line, which corresponds to that last conditional change. My target is 61.05, which is the green. My risk is $4.15 or 7.3%, which is within my parameters. If I was willing to lose 2,000 on the trade, I could buy 480 shares. And I will raise my stop to break even if I hit the green and take half off. This has not been a time where I've had major prolonged moves. By doing that, I de-risk the trade. It frees up the $2,000 for me to invest in another instrument, and my account grows as I take profits off. Lastly, some people like to see the stocks that I'm going to be looking at this week. So I thought I would do that for you. And let me go to... I'm not going to leave it here for long, so if you want to take a look. These are some of the stocks that I'm going to look at. Many of them we looked at already. Pan American Silver, I only looked at it because, like the ETF, it looks like it's at a reversal point. But on the weekly, it looks awful. So I'm just going to see if we get a reversal in metals. I'm not saying that this is at a good buy point. Most of the others are. And here's Corvo breaking above the 50. Everything looks good here. Mobo breakout. From a squeeze, pocket pivots, kahunas. And I'm going to stop it in 1 second. We'll see you all next week. Maybe not next week if I go out to the Orange County meeting. Let me hit pause and or stop it. Y'all have a great week. Bye, everybody.